Hello and welcome to this IBSA podcast on the topic of US exposed persons moving to Europe. My name is Roy Saunders, founder and chairman of the IBSA, the International Business Structuring Association, which is a multidisciplinary global association of entrepreneurs and their professional advisors dedicated to sharing their expertise with each other within a great networking platform. And today I'm joined by Darren Hayden-Joseph, specializing in international cross-border taxation for US individuals. Maybe they're moving to the UK or beneficial regimes such as Spain or Italy, or other fairly high tax jurisdictions such as France and Germany. Darren will also be covering the taxation of trusts in the US and beyond. So there you are. Darren, what are your key points that you'd like to talk about?
Hi, Roy. Pleasure to be here again. My name is Darren Joseph. HEJ.tax, a member of Moore's Rule, and we're a team that seeks to demystify the sometimes confusing role of international tax.
Does the EU in particular, and perhaps the OECD, does it frown upon these beneficial tax regimes as being sort of unfair competition compared to local residents?
I think it does. I mean, it goes hand in hand with the so-called golden visas. It's an open secret that Brussels, London, and Washington, D.C. do not like these golden visas, especially when it leads to citizenship without any real connection to the jurisdiction. They just don't like it. And they've been wielding some soft power, and now they're becoming a bit more overt with it. As we know, Malta is being taken to the European Court as a result of it. We believe that pressure is being exerted on other jurisdictions as well, because remember, there was a time, this is before COVID, so before 2020, you could have moved to Portugal from another European country like the UK or Sweden, and you would not be taxed on pension income. As a result, I think it was Sweden got very upset and they unilaterally revoked this Sweden-Portugal tax treaty. They complained to Brussels. Brussels put pressure on Lisbon, and Lisbon implemented that 10%. We know it happens, and it goes hand in hand with the golden visa thing. But Brussels is being quite strategic. They're saying, first off, because once you get access to one European country, you have access to all. So you can't claim autonomy and say you're going to do what you want, because it impacts everyone else. So let's harmonize our position. And I think that the jurisdiction that they seem to prefer, as an example, would be Austria, which makes an extraordinary contribution, which is subjective, quite subjective, but the bar is relatively high. Austria will say, yes, welcome to Austria. Here's a passport as evidence of your citizenship. So again, for some sort of extraordinary contribution, yes, but to just rock up and write a check for €500,000 or €1 million and you get those benefits, they clearly don't like it, and they go hand in hand.
You mentioned Austria. That's one of the countries that does have that step up in basis of the assets when they come into Austria. So one could come into Austria with your assets waiting to be sold, and then sell the assets once you're in Austria. You make a capital gain, but the basis of the capital gain is the high net value when you actually went into Austria. So actually the gain is negligible. That's a very, very attractive proposition.
It is a very attractive proposition indeed, but more importantly, it doesn't play negatively in the political arena. So you don't have like this two-tier system where you have a certain class of citizens who are not taxed at their worldwide income and some that are. And some that, when you exclude their worldwide income, even their domestic income may get some sort of special privilege. So it's that two-tier system that it seems to be creating disharmony.
That's an interesting concept.